Now we ask, how did the general principles of mediation apply to these disputes with their special characteristics? First, let's talk about the timing of mediation. How mature does a dispute need to be in order to have an effective mediation in a dispute of this type?
I don't think it has to be very mature. I think the success of a mediation isn't really impacted by how mature the dispute is. I think from our perspective, the most important thing is who your mediator is and who you have on the other side. Who's your claims person? Who's the broker? Have you dealt with your adversary before? Do you have a rapport with that person? I think those are much more important factors than how mature the dispute is.
Jim, we hear from insurance carriers, though, that there needs to be a certain amount of documentation, proof, discovery. Is that true?
Not for me. Maybe I'm an outlier. But I think, again, bringing this back into the Lloyd's market, it's not a good thing to be in conflict with your insured. You want to have a good relationship. You want to have a good relationship with the broker. And so when I have a coverage dispute with the insured, we look to resolve it immediately. We try to do it directly. Sometimes we go through the broker. And in the odd times, it does get to the point where it's either in litigation or has to go to mediation. And we've done pre-litigation mediations. It's probably gone a little bit too far down the path for my liking.
How so?
We'll still, because again, it's a very sensitive. Again, all back to the relationship piece, and so at that point, your insured is very unhappy. For me, a lot of times it's an insured paying 7 figures in premium. The broker is a huge source of business for us, and so it's not a route we like to go down. So the quicker we can resolve it, the better. And if we need to use a mediator, to Robin's point, we want one that's effective, and we will do it as soon as we possibly can. Obviously, there's information everybody needs. But I think with two parties that are looking to resolve the issues, they're usually forthcoming in getting that information to the other side.
Joe, you represent London carriers, U.S. carriers. Is there a difference?
I primarily represent U.S. carriers, and I think on this issue, there shouldn't be a difference. I agree with both Robin and Jim. It's generally never too early to get a dispute into mediation. I would say the only prerequisite is that you know what the dispute is and you know what the issues are. Yes, there could be factual, legal developments down the road that can affect one side more than the other, but that's the beauty of an early mediation. In the sense, the more uncertainty there is down the road, the more parties may have to consider a potential loss down the road for their position. So in many cases, early mediation is very, very preferable.
And the commercial relationship with large policyholders paying large premiums makes a difference.
Yes, because where there's a large policyholder, large premiums, there's the business overlay, and this is where the broker in both markets could be very significant, because I've seen a lot of disputes resolve themselves based on future business relationships, whether the carrier is going to enjoy a preferred position on the risk going forward. So there are many ways from pure business issues to resolve a dispute, regardless what the legal issues may be.
And just to add quickly to that, it's sometimes not even just a single policyholder where the commercial aspect of it means so much. Cover holders, we insure a lot on binder basis, and so we'll have multiple risks in a binder written out of one cover holder, which is a large source of revenue. And then also we'll have smaller risks that are generated. That there are other commercialities, and we also write embedded business on a reinsurance platform through U.S. carriers. So there's big relationships anywhere, and even sometimes when it's small premium, the broker could be influential in the community, and so you need to take that into account.
One of the leverage points that the policyholder has is you typically, for the policyholder, it's a one-off case. For the carrier, you're often dealing with either standard form language or the language is materially the same. And so, the leverage is if it doesn't get resolved and it goes to court, it could have broad implications for the industry. And sometimes that works and sometimes it doesn't work. I have been very surprised that it hasn't worked as much as it should in some of these very, very large cases, which had multi-billion-dollar implications for the industry. And I'm not sure it's just that the industry doesn't understand how broad, or it's not being communicated to the senior people in the London market. But I've been a little surprised when judges have said, if this doesn't get resolved, I'm basically going to rule against you, and it still doesn't get resolved, and then it goes to court, and then it goes to the appellate courts, and the industry loses. So I do believe that the sooner you do it, the better. But if you can't, I think there has to be a lot of communication between the counsel and the senior folks in the London market, because they have to understand what the judge has said, moreover, the implications for the industry as a whole.
Jim, you're one of those senior people. Does the argument get through, or why not? If it does, why or why not?
It does, and one of the challenging things, and I'm sure Robin and Joe have seen it, and probably a lot of people out in the crowd have too. With the London market, it's a lot of bespoke coverage. It's a lot of manuscripted policies, hearkening to the old days of Lloyd's, where slips were written literally on a slip of paper at the pub. And so you have to read the policies very careful, and it's critical for us on the claims team to be speaking with the underwriters that are writing the business, that we get the coverages right, and we want to work with the brokers and the insurers to make sure that the coverages are right. The great thing about Lloyd's is it's such a nimble marketplace, but we have to get the coverages down, and it's quite often it's some of those times where it's a bespoke endorsement or something else that causes the issue.
It's interesting. I'll be a little cynical here. I've seen many cases, as Jim and Robin have, where the broker can be very influential, and a lot of times the message is delivered to the insurers that are on the side of the good angels. Well, thank you for stepping up. We'll see to it that you're rewarded down the road with more favorable placements on risk. And to the recalcitrants is basically a message, all right, we're disgusted, you'll never have lunch in this town again. But I am very doubtful how much that is followed through upon in the business world. I've asked my clients, who I will say are always on the side of the good angels, well, have you been rewarded by this broker? And two things. Number one, it's very hard to measure. And number two, they'll say, no, not really. It's, we haven't seen any inflow of new business. And to the people that behave very badly, we still see them on risk over and over again.
Interesting points. So Robin had mentioned, do you need an offer and a demand before the mediation takes place? We touched on that briefly. Things that people would like to add. Jim or Joe?
Not necessarily. I've gone into a number of mediations where there have been no numbers on the table until you get to mediation day. And when that occurs, it doesn't necessarily mean that there can't be a resolution, either in a single session or in multiple sessions. I'm usually not dismayed when the parties are very far apart at 9 o'clock in the morning. As you know, Jeff, an effective mediator like you can quickly, close those gaps during the course of discussions.
Robin, what's the definition of a good faith offer?
It has to be within the realm of reasonability for the case. I will say on the smaller cases, you could go to a mediation and resolve it. But on the cases, most of the cases that we're handling, which are in the hundreds of millions of dollars, I don't find, if there isn't an offer on the table before I go, that it's going to be successful. I will tell you the best part about mediations is you get to know your clients. because you're sitting there for hours and hours and hours. And so for me, it's a great, business relationship thing, but I try to manage expectations, and nothing really happens until like 4 o'clock. So I'll send my associates to go up until 4, and then I'll sometimes if I have, because some of the policies require a mediation or an arbitration. So sometimes I'll show up late, but that's not the best because you don't get the flavor of what's going on during the day.
I think some of the more senior people remember the old connotation of 5 o'clock lightning. Now we've got a new definition of it as well. Jim, how does it seem to you? Is it easy to put together the kinds of offers that zealous advocates like Robin think are within the range of reasonableness?
Sure, and I can go actually both ways. I mean, I've had situations, and to clear the air, Beasley, I think we try to work with our insureds on coverage, so we don't get in a lot of these disputes. But in some cases, we will have insured self-fund the underlying claim, and then at that point, it's money that they're looking for from the carriers, and so sometimes it's a demand that we need to get from Robin and her clients. Other times they're looking for a coverage commitment, and I like to think of ourselves as sophisticated and nimble, and the rest of the Lloyd's market is as well, and usually we can act quickly and get something together, and we do act and try to act always in good faith, and sometimes, and we don't want to waste anyone's time either, so if we can't put something together, then maybe it's not the right time to mediate, and maybe there's some more work that needs to be done before we can go there.
Jim and Joe, is it easier to put together that reasonable offer if you have a reasonable demand in hand first?
Yes, in many ways, but it's interesting. I do a lot of work in the D&O area, which is not duty to defend, and oftentimes you have a mediation of the underlying dispute. The insurers are there, the coverage issues, if there are any, are going to be wrapped in as well. So you've got a couple of different dynamics that play there. One is, are you going to open up with an offer to the plaintiffs, the underlying securities plaintiffs, that's going to keep them engaged? And I have seen cases where there's an opening demand from the plaintiffs well in excess of the available insurance. So they're basically sending out a signal that they want the corporation to throw in some money, or the individual directors to throw in some money on top of the insurance, and a counter from the defense side, not unusual in 6 figures, 600,000-700,000, where the demand may be 200 million, and nobody walks out, and that gap is quickly closed during the course of the day. Now, as long as the numbers are low, usually the insurers and the policyholders are in sync with each other. It's only when the plaintiffs come down, as they often do, to a demand within the insurance limits, and then that's where the insurers and policyholders may disagree, and it's kind of a natural reaction. A policyholder might say, sometimes more politely than not, well, time to settle this case, your money, just get rid of this for us. We want to put this behind us. Whereas the insurers would say, yes, it is our money, and we think the demand is still ridiculously high. And that's basically, you move from there.
And at that point, the issues as between the policyholder and the carrier evolve and become oftentimes the most interesting and challenging issues in the mediation.
That is
That's the time when
correct.
Robin gets to spend many hours getting to know where her clients' kids go to school and their favorite color and many other things.
Well, to that point, if in the D&O area, if the carrier is advancing the defense costs, then you've got leverage. The policyholder has leverage, because if it stops, then then they don't have to pay the defense costs anymore. But when the monies, and it is the most interesting part of the mediation, when you're having a 3-way dispute, when the amounts from the underlying plaintiffs are within the policy limits, then the policyholder has real leverage, because you can go to the carrier, as I'm sure most of you know, and say, look, we want to settle as the policyholder within the limits. If you don't want to settle, then we'll go to trial, and we're going to hold the carriers accountable for those amounts in excess of the limits. And that is the best claim that a policyholder has. I mean, I'm talking nationwide, at least in the United States. That is real leverage. And while the carriers will push back, that is something that typically you'll have the claims people start calling senior people, and you'll get more people involved, and it is a very interesting part. And if the underlying plaintiffs, sometimes the counsel were a little more, I guess, understand insurance a little bit more, they would get to that level much quicker, because that's when you'll get more activity and you'll more likely settle.
It's also very interesting how in the course of that mediation day, alliances can shift.
Yep.
At one point, the mediator may say, I think we can get the plaintiffs under $100 million, and I'm representing an insurer that attaches above that point. Well, suddenly, Robin becomes my friend, and I'm allying with her. Let's get this case settled down. And it's the carriers whose ox is going to be gored that are fighting.
Jeff Kichaven is an independent mediator in private practice. For more information, please call 888-425-2520.